Duolingo, the app with the owl that guilts you into practicing Spanish at midnight. It just reported 26% revenue growth while turning a GAAP profit. That combination is rarer than it sounds in consumer tech.
The FCF margin is 51.6% on $292 million in revenue. That number tends to reframe the discussion about what kind of company this actually is.
Revenue came in at $292 million, up 26.5% year over year. GAAP EPS was 93 cents. Operating income was $44.5 million, a 15.3% GAAP operating margin, and free cash flow was $150.8 million, a 51.6% FCF margin.
I want to push back slightly on the framing of this as a growth story with profitability attached. The profitability is the story. Most consumer subscription apps at this stage are still burning cash to acquire users and retain them. Duolingo is generating real free cash flow at a rate most enterprise software companies would consider strong. That is a structurally different business than the edtech category has historically produced.
So this is not just a growth quarter. It is evidence of a business model that has actually solved the retention and unit economics problem simultaneously. Lana, break down the numbers for us.
Revenue was $292 million. Year over year, that is plus 26.5%. The subscription model has been compounding revenue at an accelerating rate as the daily active user base expands and the higher-tier Duolingo Max offering lifts average revenue per user.
Walk me through the profitability layers.
GAAP operating income was $44.5 million, a 15.3% margin. Net income came in at $43.5 million GAAP. Free cash flow was $150.8 million, 51.6% of revenue. The gap between net income and free cash flow is largely stock-based compensation and working capital dynamics, but the cash generation is real and meaningful.
What is driving the Duolingo Max tier specifically?
Duolingo Max is the highest tier, priced above the standard subscription and powered by generative AI. It offers role-play conversations with AI, advanced feedback, and personalized learning paths. The conversion from free to max is higher among users who engage with the AI features, and those users show better retention metrics. It is creating a revenue per user expansion at the top of the funnel.
And the AI is not just a product feature, it is changing the cost structure.
That is the structural insight. Historically, personalized language instruction at scale required human tutors. AI allows Duolingo to deliver a highly personalized experience at near zero marginal cost per engaged user. The content costs are largely fixed once the AI models are trained. That is why FCF margin can reach 51% while still investing in user acquisition.
Daily active user growth, any data there?
Duolingo reported daily active user growth in the high double digits year over year, continuing a streak that began accelerating with the gamification overhaul in 2023 and the AI features rollout in 2024. The engagement loop, streaks, leaderboards, notifications, is highly effective at retention, which is the key driver of subscription conversion.
The number that stops us here, 51.6% free cash flow margin, for a consumer app with 26% top-line growth.
The surprise is not that Duolingo is profitable. It is that it is profitable at this margin while still compounding at this rate. Consumer subscription businesses at scale typically face a trade-off. High growth requires heavy marketing spend and product investment, which compresses margins. Duolingo is threading that needle in a way the category has not historically produced.
AI personalization is the mechanism. Lower cost per engaged user means you can grow and generate cash.
The unit economics have fundamentally shifted. When AI improves retention and reduces the content cost per learning session, the incremental margin on each new subscriber is much higher than in the pre-AI version of the product. The Max tier amplifies this further. The highest value users are also the ones generating the highest margin contribution.
And the owl is not going anywhere. Duolingo has a brand and engagement loop that is genuinely difficult to replicate.
The engagement mechanics, streaks, social features, gamification, took years to refine. Combined with AI personalization, Duolingo now has a learning experience that is both highly effective and highly addictive. That combination is defensible in a way that most edtech competitors have not been able to match.
How does Duolingo compare to the rest of the online education and language learning space?
Coursera and Udemy are the closest publicly traded edtech comparisons. Coursera declined 0.6% year-over-year last quarter. Udemy declined 0.9%. Both are facing pressure from corporate training budget cuts and competition from free AI tools. Duolingo is growing 26% in the same environment.
26% growth against peers declining. That is not a rising tide. That is Duolingo taking share.
The differentiation is the consumer engagement model. Coursera and Udemy are primarily professional skills platforms. They depend on corporate training budgets and career-motivated learners. Duolingo built a daily habit for language learning that is largely consumer-funded and intrinsically motivated. When enterprise training budgets contract, Coursera and Udemy feel it. Duolingo does not.
The valuation reflects the differentiation, though.
Duolingo trades at a significant premium to the edtech cohort. The argument for the premium is the combination of growth rate, FCF conversion, and the defensibility of the engagement model. The risk in the multiple is whether the AI features can sustain the growth rate as the addressable market for premium language apps becomes more competitive.
Google Translate and AI chatbots are always in the background as free competition.
That is the core competitive threat, and Duolingo's answer to it has been speed. They integrated AI features faster than most pure-play edtech players, and the Max tier shows that users will pay for a structured, gamified, accountable experience even when free alternatives exist. The question is whether that premium holds as AI quality continues to improve across the market.
What is operationally working for Duolingo right now?
3 things. The subscription model is compounding, daily active users expanding, premium tier conversion improving, and ARPU rising as Max adoption grows. AI integration is widening the margin. 51% FCF on a consumer app is evidence of structural cost advantage. And the brand engagement loop is strengthening retention, which makes the revenue base more durable than an acquisition-dependent model would be.
What are the structural risks for Duolingo?
3 things in the other direction. First, the addressable market for premium language subscriptions is real but finite. Growth has to eventually slow as penetration increases. Second, AI commoditization is a genuine risk. If every major AI provider offers free conversational language practice at the same quality as Duolingo Max, the premium tier loses its differentiation.
And the gamification loop has limits. There is a ceiling on how engaged you can keep any single user.
Engagement saturation is a known dynamic in gamification-driven apps. The streak mechanics that drive daily retention also tend to plateau at some point for any individual user. Duolingo is expanding the product surface, adding math, music, and other subjects, but execution on those adjacencies is still early and unproven at scale.
We opened with the combination that is harder than it looks. 26% growth and GAAP profitability with a 51% FCF margin. That is the Duolingo bottom line.
Watch Duolingo Max subscriber growth and average revenue per user in Q2. That is the data that tells you whether the AI-driven premium tier is an enduring product or a one-cycle upgrade cycle. If you want full coverage this week, STRL, VRTX, pins, and more, subscribe to Charged Alpha.
We will see you on the next one. This episode is for informational and educational purposes only and does not constitute financial advice.
Charged Alpha is not a registered investment advisor. Nothing in this episode should be construed as a recommendation to buy or sell any security. Always conduct your own research and consult a qualified financial professional before making any investment decisions.
Ooh, we do. That ticker tape starts dancing fast. A bull market thrill that's built to last. Dividends are ringing up the swing. Listen to that sweet ka-ching. It's a Wall Street swing. That fast-paced rhythm makes you sing. Yeah, the Wall Street swing.